I know that we want to drill down into some of the specific stocks, but overall, you're happy with the valuations with some of the stocks. Others say they're frothy. Are there parts of the technology market that's frothy right now?
Well, it's important to remember that technology actually is quite pervasive across multiple sectors. So oftentimes when people speak about tech, they're thinking in terms of classifications that, quite frankly, are somewhat outdated, right? So you can see technology and the innovation related to technology across all sectors of the economy. But if you think about some of the traditional large cap tech names, the controversies really surround valuation, market dominance, and trust. And so that's why you see so much focus on the big ones, Amazon, Facebook, Google, et cetera.
So how do you then wind up screening for the good opportunities when we know that the S&P is really top heavy with like 4 or 5 really good stocks, and without it, the U.S. is just not performing as well as, say, Europe, for example? So how do you screen for value as well as for ESG, which is sort of your bread and butter as well, keeping in mind where we are in the pandemic?
Right. So we actually look for a balance in terms of the exposures we have in our portfolio. So we certainly have some growth stocks in the portfolio. We also lean into value. That's where we get our financials exposure and things of that nature. And we also look for dividend yield and other characteristics. I really think that in the midst of this pandemic, it's very important for investors to remain diversified. We just heard from your previous speaker that there's a lot of uncertainty globally in terms of how the pandemic will progress, how the economy will progress, and how the markets will respond. And so we choose to remain diversified. We keep exposure across different factors and drivers of return.
Valerie, what's your favorite stock right now? Is there one that you think is either misrepresented or that you think gives you the best value going forward?
Okay, so I won't give you my one single pick because we have 85 stocks in the portfolio. But what I would say, I mean, we mentioned Nextera, which reported this morning. So if I had a favorite child, if you will, that would certainly be among them. Nextera is interesting because it's not a new company. It's been around for quite some time, Florida Power and Electric. So it's a traditional utility company, at least on the surface. But if you dig underneath the surface, you see that they're one of the largest providers of wind and solar power in the country. Right, so they are really innovating in that regard, and I'm very excited to see their continued progress, which they reported this morning.
If the NASDAQ continues to roll over when we have big tech reporting in the next 2 weeks, what do you buy on a dip?
So we opportunistically look to add to positions that we already have in the portfolio when the market pulls back, most certainly.
So, but which ones? I mean, is it going to be the big tech? Is it going to be sort of the safety plays like a Verizon, for example?
It would probably be among the larger technology stocks that we already own.
In what space, Valerie? I know we're trying to get
we have exactly. So we have holdings in Amazon, Facebook, and Google, right? And obviously, all of those are fairly rich, with the exception perhaps of Alphabet, really. And so there are opportunities to buy those stocks when they fall back for a host of different reasons, and we do manage the portfolio tactically in that regard.
So how do you then think about the rest of the market when we talk about gold sort of hitting 1900, real yields continue to get more negative? It seems like we're going to see whippier action in August. It's just sort of trend following, and also the headlines that we're seeing. So what do you do when you get up and you see those headlines? Just kind of like take it in stride? Does it make you rethink things?
I do take it in stride, actually, because it comes with the territory. I think that the one thing we have to get comfortable with is the level of volatility in the markets. It's just the nature of where we are, again, in the midst of the pandemic and the uncertainties there, uncertainties around the response to the pandemic, and uncertainties as it relates to macro performance as well. So I try not to respond to daily fluctuations, but to really focus on how we want to be positioned more for the long term.
Valerie, when you look at the pandemic, does it just accelerate some of the trends in technology that we saw before, or are we going to go back to what it was before? And what does that mean for your valuations?
Right. There's definitely an acceleration of some pre-existing trends. So let's focus on retail as an example. Even before the coronavirus pandemic, the U.S. had more retail space or retail square footage per capita than any other developed country, right? So we knew that retail was going to be strained over time and that we needed to have a correction in terms of supply. Basically, what's happened with the pandemic is people have really pivoted and accelerated the shift to e-commerce. And that has inured to the benefit of Amazon as well as other retailers that have strong capabilities in that regard. So that's really an acceleration of an existing trend. And while it's unfortunate to see the retailers go bankrupt, there's several that have filed. You lose track. There's been hundreds of bankruptcies in retail. I do think that those bankruptcies probably would have happened anyway, just over a longer period of time.